Welcome to This Is Money podcast, sponsored by Charles Stanley Direct. I'm Georgie Frost, and joining me and Lee Boyce today is Helen Crane. And coming up, some rather disappointing economic figures for the Chancellor to digest this week ahead of the budget. Unemployment up, slower growth, and warnings of worse to come. Meanwhile, has the FTSE run out of steam just before hitting the 10,000 mark? Elsewhere, Nationwide makes a welcome promise to keep all branches open until at least 2030. The Royal Mint launches limited edition yellow gold sovereign coins. They're not cheap. But forget gold, is it time to raid the silver cabinet? And we know school holiday flights go up, but this takes the biscuit. Don't forget to stay up to date with all the latest breaking money news. Just go to thisismoney.co.uk or download the app. But first, worried about what the autumn budget might mean for your finances? With Chancellor Rachel Reeves refusing to rule out tax rises, now's the time to stay calm rather than make any rash moves. Charles Stanley Direct's financial coaching, led by This Is Money regular Lisa Kaplan, gives you access to a real expert who can help you make sense of your financial plans. Book your free 15-minute call today at charles-stanley.co.uk/financial coaching. No jargon, no pressure. Just answers you can trust. Remember, investment involves risk. Now back to the show. Right, a double dose of bad news for the Chancellor this week as she prepares to hike taxes in the budget. Unemployment hit its highest level since 2021 and the economy saw slower than expected growth of just 0.1% in the 3 months to September. Analysts, meanwhile, have slashed next year's forecast, and jobs experts say last year's rises in the minimum wage and employer national insurance are still feeding through to today's job figures. Lee, Helen, welcome. Lee, put it all together, shake it all about a bit. What does it all mean? Why is it so significant so close to the budget?
Oh, is the budget done yet, Georgie? Are we there?
Sorry, mate. We've cancelled the anti-budget. We've only allowed 5, because I think I've said 5 in that introduction there.
I think you might have done. Yeah,
Sorry.
Let's shake it all up and see what it's painting a picture of, right? So there has been, I would say, a couple of quite big economic pieces of news this week. And GDP, of course, was one of the biggies, just growth of 0.1%, as you said, between July to September. It's an important measure of a country's economy. It's the total value of all finished goods and services produced within a certain period of time. And it doesn't look good. And actually, one of the factors that was in this was the cyber attack, which actually shows you how fragile businesses can be to things like this. It's going to be a growing threat. We had figures earlier in the week suggesting how many more businesses were having to claim on cyber insurance. So it could be a real sort of tip of the iceberg of what could be to come over the coming years and how much of an effect it can have on a set of figures like this. And that's kind of helped drag it down. But then we have had some forecasters sort of update their figures on where they think that the country's heading. So Morningstar, for example, their forecasters are saying GDP down from what it was predicting 1.5% next year to 0.5% next year instead. Basically, the tax hikes that could be planned in this budget are going to kneecap economic growth. This is what this headline is saying here, because there's other analysts that are also pointing to the same thing. Treasury say GDP growth of 1.1% next year, down from 1.3% forecast in March. NatWest has gone for 0.8%, and Barclays is actually the most positive at 1.3%. None of that is particularly good reading for the government. And a lot of it is over tax hikes that have been sort of rumoured and planned. And I think fundamentally having this late budget just got the rumour mill into more overdrive and more of a frenzy than it needed to have been. And this week we have seen it looks like income tax hikes are off the table. We've kind of had it all but confirmed that pension lump sum is going to be left alone. But it's still such a mixed picture, isn't it, Georgie, in terms of the economy?
Maybe I'm wrong here. I've never known anything like this before. All of this speculation, all of these sort of warnings, it feels like something new every day. And then Lee's saying, oh, this is not going to happen. But what is going to happen?
Absolutely. It's gone into complete overdrive. We've seen, I think it's sort of built up over the last few years, this sort of cycle where they set the date for the budget and then they start floating things. And this isn't just Labour. The previous government did do this as well. And they put things out there, and then essentially if something gets or, it's all tax hikes, so everything gets a bad reaction. But if something gets a terrible reaction, then they'll maybe kind of rein it in. And this kind of floating things out there, I think it's really damaging. We've seen people sort of tinkering with their pensions and things like that, which is really dangerous. But, we've been writing about budget rumours since, I think, August. I think it's like half the year is now taken up by budget speculation. It's like it's become like Christmas. It's like it takes up like 6 months of the year. Like the preparation for the budget starts earlier and earlier every year, Georgie. Like it never ends. But we've got less than 2 weeks to go, so it's gonna be over soon. Not gonna be over. There's probably gonna be some really bad news. So it's just, can you tell we're feeling a bit despairing, Georgie?
I mean, the fact you likened it to Christmas, I mean, we were all a bit fed up of mince pies coming out in August, but I'd take mince pies coming out in August than the amount of speculation that's been happening about this. But Lee mentioned there about the speculation of what's going to be in this budget. But you've been speaking to a jobs expert who's saying that actually it was last budget that's still playing out now into the jobs figures.
Yeah, so we've had an unemployment rate of 5% between July and September 2025. That's the highest since 2021. Actually, I've had a couple of conversations with friends in the last couple of weeks who they're employed, but I've got one friend who kind of doesn't really want to be at the job he's in at the moment, but he's too frightened to move. He just doesn't think there's anything out there for him to move to in the industry that he's in. And I think that might be a symptom of how a lot of people are feeling now. They're kind of worried about jumping ship into another job, the looming threat of AI, for example. But the person we spoke to for this story, Kate Underwood, who's managing director of a human resources company, saying that, the last budget is the real culprit behind these job figures. And what it is the national insurance hike for businesses that we saw, and also minimum wage. Minimum wage has been going up and up and up, to a point now where I was working out figures the other day for how much the minimum wage was for a 16-year-old, and it's gone up from something like £3 odd in 2015 to £7 something now. We were talking about our first jobs around the desk, and remembering earning like £3-4 an hour. It was like a rite of passage, wasn't it? Whether it was a bar job or working in a retailer or whatever. Of course, you were doing it for the money, but you were also doing it for the life experience and what it taught you going forwards. And I think that all those kind of things puts off especially small businesses from taking on more people. But interestingly, in the data, vacancies actually inched up 2,000 to 723,000 between August and October. So, as Kate says, openings are there, but few people are actually in work. And she says that's not stability, that's stagnation. This is not a one-off. This isn't a one-off wobble. If the sound of the economy hitting the brakes, when jobs go but vacancies don't rise, it means businesses aren't confident. That does not sound good. That's not a good recipe when you mix that in with the GDP figures as well. And I think that the budget, sometimes small businesses and things like business rates get left behind because, we're not talking about personal finances here. We're talking about people that kind of run, the real kind of backbone of this country. And, they're always talking about, business rates need reform, or, business rates are killing us. And then they've got all of these other mounting costs and pressures. And then you can kind of start to see how it's a recipe for, future stagnation in the jobs market, future stagnation for GDP and all of that kind of thing. You mix it all up and it kind of all paints a very mixed, not a great picture.
So it all comes down to a bit more what happens in the budget in a couple of weeks and the decisions that are made there. £3.20, Lee. That was me at Safeway. They offered me £3. I negotiated £3.20. I've never been so proud, and I've probably never done it since. So it didn't set me up for life. But
I used to love Safeway, Georgie.
There you go.
It was our go-to supermarket in the little town called Eastwood outside of Southend. I used to love Safeway. Turned into a Morrison's. I think I earned £4 an hour in a shop called the Factory Shop, which basically sells absolutely everything. And then I remember getting a pay rise, and it went up to £4.08. I remember it really, really, really specifically. But also, I used to lug like 35 kilo boxes upstairs and things. I don't know if I'm built for that anymore. It was like getting paid to go to the gym.
That's hefty. Helen, do you remember?
Yeah, so I worked in a shoe shop called Brantano, which has now gone bust, and I got paid £3.90 an hour to measure little kids' feet for school shoes and get kicked in the head.
Oh, right.
Yeah.
On that note, the FTSE has been on something of a tear this year, hitting a new record high this week. Against a backdrop of disappointing economic data and wobbles in other markets, the blue chip index outperformed major US indices, trading up nearly 20% year to date. That fueled a lot of speculation that it could reach 10,000 points by the end of the year or even sooner. And then it hit a bit of a wobble of its own.
Yeah, it's funny, isn't it? So we should
Mm.
expect how the podcast works. We tend to sort of send the stories over on a Thursday afternoon to get lined up for Friday recording. And I've seen FTSE 100 was like 9,900. It's cruising towards 10,000. It's an absolute tear up this week. Started the week at about 9,700, and now it's had all of its gains wiped out in one single morning, and has dipped at time of recording back to below 9,700. It's still up 0.1% for the week, but it's almost like this week hasn't existed. It's just like,
Yeah.
you may as well have not have bothered. No, I'm only joking, but it shows you how quickly things can change. But year to date, George, you're right. It's up almost 17%. It has been on an absolute tear up, and let's not forget, in April, we had that real big market wobble, and it actually went below 8,000 with all of the AI threat stuff that when we had that kind of really mad wobble. And since then, it's just been edging up and up and up. One thing we got to say about the FTSE 100, of course, though, is that it's a very international index. A majority of the businesses are, of course, on the market, but are foreign businesses essentially, and it doesn't give the greatest kind of flavor of what's happening in the UK, so to speak, because it is such a global market. And then when you look at the FTSE 250, which is the next 250 biggest companies, a lot of that is actually more UK based, and that's had a more modest 5.2% growth year to date. It's still nothing to be sniffed, but it gives more of a snapshot of British businesses. And looking at this, the top performers in the FTSE 100, some of them, George, are absolutely incredible. Fresnillo's up 288%. Mexican businesses, sort of gold, silver mines, that kind of thing. And there's a couple of quite big, familiar names in there. Rolls-Royce up 106%, and a couple of the big banks are in there as well. Lloyd's is up 78%. Barclays is up 62%. Standard Chartered's up 69%. So, there have been some real standout winners in the markets. Is it going to reach 10,000? That's what you're going to ask me, isn't it? Georgie, is it going to reach 10,000? What do you think?
Eventually, yeah.
At some point.
At some point, probably,
Going to
yeah.
hit 10,000 by Christmas. I'm flipping. I'm being presented today.
I'm curious to know, a lot of speculation about the budget as to what impact that's going to have. If it is so international, then what impact would a budget have on it?
Well, that's a good question, isn't it? A lot of it, though, is to do with just global stability, isn't it? Anyway, and like things like budgets from around the world and decision financial. You have to look at the US and the tariffs that Donald Trump just sort of landed on everyone. How quickly things can change, and actually, talking to actual experts instead of just us talking about talking around the table. Analysts are confident it will reach 10,000 by the end of the year. They've set a target of 10,778 points, which seems very, very
Wow.
to me, 10% higher than its current level. Fidelity says target prices devised by equity analysts reflect expectations for how an index might perform over the next 6 to 12 months. While forecasts can prove accurate, they're not always reliable, as seen in 2022 when a wave of interest rate hikes derailed overly optimistic projections. AKA, things just move on a penny, Georgie, and it would be quite symbolic for it to go over 10,000 points over that milestone. That's a big number.
I mean, it's dead close, isn't it, at the moment? But Helen, I remember you and I talking a couple of weeks back about Goldman Sachs making predictions that interest rates would be cut, and they weren't. And they are real experts. So, it doesn't really matter, does it, Lee and Helen, if it actually does reach 10,000 or not? It's about how it's doing generally and overall.
Yeah, exactly. I mean, obviously, the index is a collection of shares in different companies. It really depends on how the individual companies are doing is kind of more important than reaching this one number. The budget is going to be a big factor for this as well. Obviously, it is an international index, but the kind of companies that are in the FTSE that might be affected, and that I think a lot of people own are like your house builders and your banks, and I think they will really be looking out for what happens in the budget, and I think that could potentially kind of turn it, if they do start taxing wealth and tinkering around with the property market and savings and things like that. I think that could start this kind of doom and gloom atmosphere. Although in the article we've written about this week, we do say that in a way, if the budget is really bad, it could be good for the FTSE, because if it goes into complete chaos again, and gilt markets start really sort of coming under pressure, and the pound starts coming under pressure, it'll actually make investing look more appealing. So as you say, there's a lot of things kind of feeding into this. So yeah, we'll see what happens.
Helen makes a good point there, and Dan Coatsworth from AJ Bell sort of summed this up quite nicely. It says, while doom and gloom might cloud the outlook for businesses and consumers, look back at the job unemployment figures and GDP figures we were just talking about, it could also strengthen the argument for more interest rate cuts, and that is traditionally positive for stock markets. It ultimately comes down to the details of the budget as to how markets might react. And then he goes on to sort of say about the chaos that Helen was just talking about, and because it is such a global market, people might see it as it being more appealing, that the FTSE 100 being more appealing, and actually look better. And then when you compare it to something like the S&P 500, I think lots of people have kind of really got involved in investing in America and might have had a bit of a shock this year. And we've got some figures here from Neil Wilson of Sachs. He says the FTSE 100 trades at 14.3 times earnings. To get to 10,000 it requires a modest uplift to 15 times. Meanwhile, the S&P trades at 22.6 times earnings. Relative valuations have started to matter again due to macroeconomic conditions and high terminal rates. There is no alternative to America trade is no longer quite as easy as it once was. What that suggests is that analysts are saying that the FTSE 100 is still a little bit undervalued. Yeah, and I think that's why we've got those spicy kind of outlooks for a plus 10,000 finish to the year.
All right, then. Let's leave some gloom and doom aside, Lee, because we've actually got a little bit of positive news. With bank branches closing up and down the country, it comes as somewhat welcome news this week that Nationwide Building Society vowed to keep its entire branch network open until at least 2030. Now, Lee, you called up with retail director Mandy Beach about why they're doing it. But first, just explain to us how many branches are we really talking about? What's the picture like? And where are people going instead?
The picture is pretty bleak, Georgie. I think you only have to go to any high street and see almost the kind of gutted out banks that have disappeared, or they've turned into a coffee shop, or if you're in Kensington, it's turned into a fancy Italian restaurant. I think that across the country, we have stories like that, and actually 67% of bank branches have disappeared since 2015. 6,731. NatWest and RBS have closed 1,377. Bank of Scotland, Halifax Lloyds, 1,252. Barclays, 1,230. HSBC, 743. We actually asked the big banks how many branches they've got left, and I was quite shocked at some of the answers. Barclays says it has 200, which I was actually quite blown away. You have to remember, though, that they also do these kind of pop-up clinics. Say, for example, Barclays shut in my local high street and is now positioned in the library, and you can go and visit a couple of days a week when it's open. And the whole argument towards banking hubs, of course, has been strong to have just one centralized branch where each bank has a day in that branch, and I kind of see the logic to it. But Nationwide have kind of flipped all of this on the head. Of course, Nationwide have closed branches in recent times. It's not to say that they haven't closed any whatsoever, but the last couple of years they've really gone for this branch pledge to keep branches, all the ones that are still open. That was until 2028. They've now extended that to 2030. So the Nationwide, if you've got one on your local high street, will be there for the next 5 years. And it has vowed to keep open all of the Virgin Money branches, which it took over last year. All in all, that's 696 branches. It's now the last branch in 133 towns and villages. And actually, you only have to look in the comment section of this story of how positive people are about it. And they've got stats about how many people are actually kind of jumping from other banks to Nationwide. We've seen the switching figures. The switching figures are absolutely incredible anyway. But there's some stats in this that I thought were quite interesting. So in the year to September, there was an 11% increase in the number of customers using branches at Nationwide. And it says a third of current accounts and 1.5 of savings accounts were opened in branch in the 6 months to the end of September, which suggests that the appetite for face-to-face banking is still there, despite a shift to digital. And I think something like even 1 in 8 student accounts were open in branch. We think of the younger generation if it's always been on the phones and using apps and whatnot, but they're saying that there's still an appetite for students to come in and open a student account in branch. So you add all of that up and it feels like a positive move for high streets. And let's not again forget about small businesses. There was some data that I was chatting to the FSB, the Federation of Small Business, and they were saying that a third of local businesses say that a reduced ability to accept cash poses an extreme risk to their high street, and 3 in 5 claim their local branch has closed since the pandemic. It becomes difficult when banks disappear from high streets to keep a cash kind of float going, because where do you go and pay in your takings and all of that kind of thing? Do your business banking? Nationwide doesn't offer business banking, but Virgin Money does. But you can see it decimated the high street, and it becomes less of a reason to visit the high street. And I think it's one of many symptoms of why the high street is struggling. I caught up with Mandy Beach, retail director at Nationwide, to find out why they were making this move and actually why it made sense as a business, if it was a sensible business decision.
We've actually had a promise in place in some guise or other since 2019. So our customers will be familiar with this, but it sort of further commits us at a time when on many high streets, we are seeing competitors leave. And on some of these high streets and many that I visit, they are thriving. I don't know when you went last into a branch, Lee, but I would say they remain busy. We saw 11% more transactions last year than we did the year before. And by transactions, that's just genuinely people using the facilities and services, as well as those customers that may then come in to open current accounts. So they are really thriving. So the promise is really to reassure people that where they might see others leaving, we're absolutely here to stay.
And how crucial is it, would you say, to some of the communities, perhaps some of the communities where the high street isn't thriving?
Yeah, a couple of things I'd say is that when we see a closure, let's say we have a phrase called last branch in town, and that's where we're remaining when others have closed. And we're in over 100 of those places now. So these are generally your smaller places across the wider UK. But when we see a competitor announcement close, we see an uptick in two things: the ATM that we have in those branches and the amount of cash that goes out of them, as well as the numbers of accounts that we open. So what that tells us is that people really do value, and they may not use the branch all the time, but the fact that they have somewhere to go in a time of need or for anything else actually that they might want, it's having that choice point really that really does matter. I spoke to a branch colleague yesterday and they were saying to me that one of the first questions people ask us is, "You're not going to be like everybody else, are you?" Then they commit to moving the business to us. So if you think about it, what people want is, number one, service from great people and provide me with brilliant service. But equally, they want the products that sit behind it and everything else. And by the way, it doesn't mean that just because we're committed to branch, we don't also invest in our facilities on the phone, or equally accept that people do enjoy using the mobile bank too. It's the whole thing coming together.
It's about having choice, isn't it, I guess?
100% now. We sort of commit this idea of channel of choice. So in other words, if you come in to a branch, you can do what you need to do there. So it's not a question of the counter's only available for a certain amount and you need to use the ATM. It's genuinely allowing customers to interact with us in a way that suits them. And that has been a real game changer, because people are generally thinking that you're trying to migrate them to digital. That is not the case.
Who would you say is a typical customer now going into a branch?
It's all walks of life that use our branch facilities. So reassurance, looking after our elderly, absolutely critical. You also see perhaps more vulnerable individuals who might need more support than they can get by using the phone or maybe digital. Again, that's really reassuring for that particular group. But equally, what we're definitely seeing more of is the younger population younger group, maybe 18 to 24, really valuing that sort of life moment, whether that be help me with an ISA, show me how I need to save. So I would say people need to be reassured that our doors are open for everyone to come in and see our colleagues at the time that suits them and for whatever suits them as well.
That was Lee talking to Nationwide Retail Director Mandy Beach. That's it for part one.
I'm joined now by Blair Gashi of Charles Stanley Direct for our weekly Invest and Explain feature. Blair, a question from a listener here. The FTSE 100 is nearing 10,000 points, but is the index a reflection of the UK economy whatsoever?
Honestly speaking, I think the FTSE 100 doesn't really tell you much about the UK economy, okay? A lot of these big names that are in the FTSE 100, such as Shell, Unilever, most of their kind of profit and money is made overseas. I think there was actually a statistic that said around 3/4 of the FTSE 100 earnings are from abroad, okay? So when the FTSE moves, it's often reacting to kind of global stuff, kind of like the oil prices, the dollar, or recently what's happening between US and China, rather than what's actually happening in the UK high street, okay? If you want a better indication or better read on how the UK is actually doing and which tracker shows this, I would probably say to look at the FTSE 250, which is the index of the next largest 250 companies listed in the London market, because that's more focused on domestic companies. So yes, the FTSE hitting 10,000 is a nice headline, but it doesn't really mean the UK economy is booming. It just means big global firms such as Shell and Unilever are having a good run so far.
That's great. Blair, thank you very much.
Thank you.
Welcome back. The Royal Mint is bringing back the classic yellow gold sovereign for the first time in decades, and collectors are already getting a bit excitable. As for investors, with gold prices surging, markets jittery, and trust in physical assets at a premium, these new bullion coins, starting from £1,200, so not cheap, could offer exactly the sort of reassurance that they're looking for. So is it nostalgia? A bit of investment savvy? Or a bit of both? Lee, the coin man Boyce, give us a little potted history of the yellow gold sovereign.
Yeah, so this is a real historic coin in British history, and it's been part of our sort of money identity, I would say, for 500 years, probably more than 500 years. It was introduced in 1849 under King Henry VII, and it symbolised authority and national stability. And the modern sovereign, the one I recognise across the globe today, debuted about 200 years ago, and it went on to become the sort of like dominant gold coin of the 19th century. And what's happened in recent years is that really it's been hard to get hold of a yellow gold sovereign. It's been more of the rose gold that has been out there. And
Why?
I think it's just the way the kind of market has been. I don't think there's like a real explanation to it.
I don't like rose gold.
You don't?
No, I prefer a yellow gold.
It looks more kind of, it looks more historic. It looks more kind of, exciting. And actually, they've come back and brought this coin out with quite a lot of security features on it as well. So that this is a genuine thing. And you pointed out the price, Georgie, £1,200 for a piece of gold that's probably worth more like £700-800. But you've got to, the amount of gold that's in it, but you've got to remember the craftsmanship of it, these security features. And actually, I've just had a look on the website and already sold out. It was a limit.
Wow.
3,000. The one
Security features.
Make sure that it's legit, and there's 3 cutting edge ones on this, which is a micro text, a latent security image, and insecure background patterns, which make it very difficult to dupe, make it very difficult to fake. As I say, 3,000 of them are gone. There are still options on the website. Some of it is already sold out. There's a 4-coin set, £4,395. It's showing up as currently reserved. And then there's the 9,950 set, which is 5 coins, limited editions of 500. It says available to order, but then there's the Sovereign 3 Centuries of Kings set, £3,595 out of stock. So then they launched literally 2 days ago.
Wow.
Which shows you gold has just become a real fixation for investors, and it won't just be UK buyers. I know for example, Germany, they're massive for their gold coins and bullion and sovereigns. So I wouldn't be surprised, if it's gone to a real range of international buyers. But an interesting move by the mint, and I wouldn't be surprised to see more of this kind of thing coming.
Oh, good one as well. Seems to have done pretty well. Helen, just tell us a little bit about what's going on with gold at the moment. Talk about it a lot. It's making a lot of headlines.
Yeah, we really do. And the price has really surged this year. And that's because of this, as we've been talking about, and as we talk about all the time, this kind of turbulent financial landscape that we're in, all this uncertainty, you know, job losses, inflation, budget. It's hugely uncertain time. And when things are uncertain, people do turn to gold and other physical assets. I mean, it's kind of the equivalent of like stuffing cash under your mattress, right? It's something that you have physically, you can hold. It holds its value quite well. People always know what gold is always worth something, unless the world absolutely kind of goes goes down the toilet and we're all just like living in bunkers. Gold is always worth something. So people are kind of flooding into this, and this has driven up the price. And as I think we're going to talk about in a minute, even silver is also going up. So people are really scrambling towards these very, very safe assets. And then also, as we talked about before, if things like having cash in savings maybe isn't going to be as much of a kind of good bet, if things like the ISA allowance slash rates go down, buy some gold. A lot of people have it as just a part of their portfolio to kind of diversify and have something that's quite a safe bet. So I think that's part of the reason why the Royal Mint has done this. It is partly this history and this sort of commemorative aspect of it, but actually there is a really big kind of demand for gold at the minute, and they're all looking to take advantage.
Daft question, Lee, perhaps, but I went into a jeweller's the other day thinking about getting a gold ring, family thing, and they said, "Ooh, gold prices are really high at the moment. This would have been £300 cheaper had you bought it this time last year." I asked the question. They didn't just tell me that as if to say, "Have a great sales, look at you." I know. I did ask. I was like, "Oh, this is really interesting. It wasn't going to be that expensive, but let's say you wanted to spend, a few grand or something on a ring. People ask all the time, what's the best way to invest in gold? Is that a way to invest in gold? They're literally just buying the stuff and wearing it."
Yeah, definitely. Well, the thing is, it's a hardy metal, isn't it? It's not like something that's going to wear down or you're going to kind of like destroy it. Mate, you might lose it,
Yeah,
but
I mean, there is that.
as long as it's carroted and it's legit and you've got the hallmarks and things in there, yeah, of course, that's how a lot of people do have it rattling around in their homes without kind of realizing it. And other ways to get into. I mean, the Royal Mint has gone absolutely massive into it. In recent years, the bullion sales is really where it's making a lot of its money, and it's hit it at the right time because it's made it more accessible to people as well. Georgia would say it's made it they have vaults. Of course it costs money, but there's an easier way in. And at the moment, it has been on an absolute roaring run. Gold is up 35% in 6 months. But as you just pointed out there, silver is actually up 65%, although it's nowhere near as valuable as gold.
Well, yeah, it's interesting, isn't it? Silver. It's sort of, what do they call it? The red-headed stepchild. Isn't that what the Americans call it? Of gold. Ignored, undervalued, dismissed for decades. But actually, Dan Hatfield, who is your valuation expert, reckons that silver's rise over the next decade will be the biggest commodity shock of all, which leads to the question, do we raid our cabinets and jewellery boxes and sell now, or do we hold on to our silver? I don't think I've got any silver, but if you did have any, what should you be doing with it?
Yeah, it's really great piece here, Dan. He's really gone to town with this. He's a pawnbroker, so he lives and breathes this stuff. I think he's a fourth generation pawnbroker, so it goes through his family. And he actually describes silver as the difficult little brother to gold, which I quite liked. And I think a lot of us, we do think of silver, we think of the family silver. I'm going to sell the family. Yeah. And it's like spoons and things like that. And as he points out in this piece that he wrote for us, he says he's always struggled with its identity. Is it a precious metal? Is it an industrial metal? Is it a hedge against inflation? Is it a commodity? Is it all of those things? And I think that it's kind of not had the same shine as what gold has had. But as he points out in here, it's one of the most important materials in the modern world. It's powering a lot of the technology that we use. And it seems that supply is shrinking, demand is rising, and that's only going to result is going to mean one thing. Is it a good time to go and raid around your drawers and cupboards and find all of your silver and go and sell it? Well, it's up 65%. So, I mean, it's not a bad time in 6 months, is it? But it just depends what you've got and whether it's heirlooms and things that you want to, keep hold of. And also, if it is things like jewelry, again, it's about the craftsmanship of it as well. And it might actually be worth more because of the way it's been made, or rather than it being, the actual per ounce scrap value of something. So I think it's interesting. Silver in our comment section always gets quite a big mention from people when we write about gold and saying, I've gone into silver, or, you should also put silver into your portfolio if you're holding gold. I mean, Danny himself says, if you have broken or unwanted silver, this is an excellent time to cash in. Prices are strong, demand is strong, the market wants silver. But if you're holding pieces as a long-term hedge, there's a case for keeping them. And he's saying that structural forces behind silver's upward trend aren't short-term fads, and they look set to continue. He's quite confident. He feels confident in where silver's going.
Well, where's the best place to cash it in? Do you go to a pawnbroker? Because I heard that they don't give you good rates. Do you take it to a jeweler's? Is there
Well,
another special place you can go that I
Yeah,
don't know of?
the key is to shop around, Georgie, and making
Right.
and also to know kind of roughly in your head what spot prices are for silver, because you don't want to go in and get ripped off. And I'd be honest, I think that independent pawnbrokers are probably going to be a little bit of a better bet than some of the bigger high street names. But that's not to say that some of the bigger high street names are also not offering fair prices. You just got to go with a little bit of nous, a little bit of research, and a whole bag of confidence.
All right, finally, Helen. Look, I don't have kids, but I know not to travel during school holiday times because things can get rather expensive. But I have to say, I was a bit surprised at the title of your article. Family quoted £20,000 for 4 tickets to Dubai. I wouldn't spend £20,000 going to Dubai in half term, one way. After, it goes on, BA cancelled their flight. There's a lot in that one sentence, isn't there, to be outraged about? You're going to have to break that down for us, Helen. 20,000, 4 tickets, one way, BA cancelled their flight.
It's a really shocking headline, isn't it? And look, we all know that going on holiday during school holidays is much more expensive, but this absolutely takes the biscuit. So this is a reader that wrote in. He was on his way with his wife and his kids to Dubai. They 9 hours before they're due to take off on their BA flight, they get an email to say their flight has been cancelled. So when this happens, your airline is supposed to place you on an alternative flight. And if they can't do that on their own airline, they're supposed to sort you a flight on a different airline. And so they did that. But these flights weren't really convenient. They were actually extremely inconvenient. So this flight would mean that instead of arriving in Dubai just before midnight, it left Heathrow in the evening. So they'd get to Dubai the next morning. They'd miss a night in the hotel that they'd already paid for. So with a small child in tow as well, I imagine that would just be a complete nightmare. So they decided to look at some alternative flights. Now they're real loyal BA customers, as a lot of people are. They've got a silver membership, so they decided to look for another BA flight, but they couldn't find one. So they do a search and they find some flights leaving just an hour later than their original flight was supposed to go, but they're with Emirates. Now that's okay because under this rule, BA should place them on an alternative flight. So he goes on to these flights, and 4 one-way tickets were around £6,000. So this reader thinks, that's really expensive, but I think I should be able to get my money back from BA. So decides to put it on his credit card, clicks through on the website, and Emirates pops up a message saying the airline has increased the price by £14,048.99. So about £20,000 for 4 tickets, which is absolutely incredible. And, we all know that airline websites are quite tricky with their, you've got X amount of time to put this in your basket and then it goes up. But that's just
I've never seen that. That's unbelievable.
No, I know. It's absolutely outrageous. So we got in touch to ask Emirates why this was able to happen. Obviously, in the end, the family did not buy the £20,000 tickets for 4 people. They accepted that initial flight where they lost a night in the hotel. Annoyingly, but saved them obviously thousands and thousands of pounds. But when we asked Emirates why the price was able to go up so much, it said that fares vary depending on the seats and classes available. Once a class sells out, the system would display the next available option, which may be more expensive. Well, yeah, it was quite a lot more expensive. So it looks like perhaps what has happened was that during the booking process, the class of seats that they'd booked sold out. But I mean, has it, or is this just a tricky little airline ruse? Oh no, oh dear, it's gone up by £14,000. I mean, it just shows that when you're booking flights that are when you're booking so close to the time you're taking off, they know that you're absolutely desperate, and they'll just whack it up and hope that people would pay for it. I mean, but hoping that people would pay an extra 14 grand is like, how often does that work? I mean, I guess it works sometimes, maybe if people are going to Dubai, but surely not often. It's just absolutely outrageous, I think. I mean, yeah, really feel for this man and, stuck at the airport with these young kids, and just sounds like an absolute nightmare. I'm certainly not going to try and go on holiday during half term anytime soon.
I mean, it seems to be quite a bad sales tactic because, maybe a grand or two, then maybe you would sort of upsell and buy it. But 14 grand just seems a bit silly, to be honest. Did they get any sort of compensation for losing that night in the hotel, or?
Yeah, so they're in the sort of compensation process, and I think they should get about £2,000 for the inconvenience of the sort of rearranged flight. And a compensation with airlines is based on normally on the amount of time you've been delayed. So I think they were delayed about 10 hours, and the fact it was cancelled with less than 7 days notice, but for compensation as well. So should get about £2,000. So all right, but still doesn't really make up for all the massive inconvenience. And we don't know how much they pay for the hotel either. So it's a great situation.
Lee?
I just think it's a horrible situation as being, it's bad enough if it's just you or you and your partner, but when you've got children, as we've said on this podcast before, flight time is everything. And it can be the difference between your child sleeping on a flight or behaving on a flight and them being an absolute little menace, and actually having to do a connecting flight and all that kind of stuff with this rearranged flight. Just not good whatsoever. And I should point out here that Adam's a friend of mine, and actually he messaged me while I was on my own half-term holiday, having just arrived at destination via BA. I was like, I don't need to know this, mate. He was WhatsApping me his dramas about how this was unfolding. So he obviously sent him over to Helen and to be Crane on the case to see if she could help, and then ended up actually being in the paper because I think it's it's a two pronged thing, really, isn't it? Like the last minute cancellation just really isn't on, and it's really difficult because if the return flight isn't cancelled and your accommodation isn't sort of flexible, you can end up being quite a bit out of pocket. And then the second bit of it is the dynamic kind of pricing element to this Emirates flight, and seeing a price and thinking, actually, well, that should work and I should be able to then claim on that, to then get through to that kind of fight. It's like Oasis all over again. And you get to that final little bit of screen, and the price has all of a sudden gone up absolutely hugely. I just think it hasn't made either company look particularly good.
We shouldn't have been having this conversation, though, about 6 hours before I'm about to get a BA flight. Wish me luck, everybody. Wish me luck. Right,
It's all right, Georgie. On the way back from our BA flight at half term over Christmas, sorry, not over Christmas, over half term, and it was a night flight. My eldest daughter, who actually she turned 7 this weekend, she was struggling to get comfortable in the seat, and she stood up in the aisle and she said, "Next time, Daddy, you're flying us private." And I was like, oh my word, why is she saying this? How does she know what a private jet is? And people were looking at us like we were completely bonkers. And then luckily,
You big snobbly.
she went on the, oh, we're flying BA economy, mate. We're not big time rollers. The next thing I looked to, you to put the blanket over her entire head and body and was asleep. So, from private jet to using that horrible material BA thing over her head in economy because the seat she just can't get comfortable where she's got a little bit taller. It made me giggle.
How old is she, Lee?
She's 7 on Sunday.
She's 7. Yeah. Wait till she gets about 17 and she thinks it's uncomfortable now. Right, that is it. You can keep up to date with all the latest breaking money news. Just go to thisismoney.co.uk or download the app. And if you have any comments or questions for the team or anything you'd like them to look into, Lee.
Yeah, you can email us at podcast@thisismoney.co.uk and you can comment in the comment section of where this podcast will live. And you can also X us at This Is Money.
And also a big shout out if you want to come up to me on the tube and say to me, "Hi, are you Georgie Frost or Helen Crane?" I mean, you can call me Helen Crane, I don't mind. Lee Boyce might be a bit funny, but if you want to come up to us and say hello, please do.
Yeah,
Most welcome. I'm sorry I didn't get the name of the person who did that after the England football match, but hello, thank you very much for coming to speak to me. If you like our podcast, why not rate us wherever you found us? It helps other people find us too.